stocks need to defend this 200-day level and get a bit of a move higher here and start to kind of firm up if we're going to have this year-end rally that historically, since 1956, whenever you've had a weak August, September period, you've always had a strong fourth quarter. So the odds are in favor, statistically speaking, of a rally going into the end of the year. Here's what you need to know before the bell this morning. Yesterday, the market did come down, and we are flirting with that 200-day moving average, and this is kind of a key support level for the markets for a variety of reasons. And when we go back and kind of look at the markets here over the last, really since that October rally kind of came into effect, we've got a couple of things going on. First of all, we're flirting with this kind of breakout support. So we talked about the market had been consolidating and working through kind of a bottoming process coming out of October. And then we broke out of that consolidation in March. So kind of following that bit of a sell-off in March due to the banking crisis, the markets broke out of that, and we had this nice rally here. Well, that breakout level also corresponds right now with that 200-day moving average. So there's a really good level of support, a real critical level of support for stocks right here. So stocks need to defend this 200-day level and get a bit of a move higher here and start to kind of firm up if we're going to have this year-end rally that, historically, since 1956, whenever you've had a weak August, September period, you've always had a strong fourth quarter. So again, historically, the odds are in favor, statistically speaking, of a rally going into the end of the year. But if that's going to happen, we're going to have to defend this support level at the 200-day moving average. If we break below that, there are some other key levels of support, but most likely we're going to be looking around 4,000 on the S&P. So there is certainly some downside risk. And if we do get a confirmed break, now that's the key word here is a confirmed break of the 200-day moving average, then we're probably going to be looking at 4,000 on the S&P, and we'll have to reduce equity risk and kind of react accordingly to that break. But right now that hasn't occurred yet. Markets are very oversold here. So again, if we do get a reflexive rally here that converts this MACD sell signal back into a buy signal, that should give the market a bit of support here for a rally, probably back up to around this 4,300 level, which is where the 100-day and the 20-day and the 50-day are all kind of coalescing together at the moment. So there is some decent upside for the markets in the short term. Bit of a relief rally here would not be surprising. The interesting thing will be whether or not that we set a lower high by the end of the year. If we do set a lower high by the end of the year, that's going to kind of dove into this idea of this weaker economic growth starting to translate and this lag effect catching up into a weaker economy next year that's going to weigh on earnings, weigh on valuations, and again, that's a whole different ball game once we get through the next couple of months. So again, kind of keep a watch here. Again, we've got some key support levels that we need to hold on to in the markets. We'll see what happens. The ADP report is going to be a very good driver of markets. If that thing comes in really hot tomorrow, well in excess of expectations, shows really strong growth, that's going to weigh on stocks here because that's going to push the Fed, which is meeting at the end of the month for their next meeting, again, push that odds of another rate hike by the Fed. Right now, the Fed's probably done, but we'll have to see what that employment report says tomorrow. That's what you need to know before the bell this morning.